Hi, what's up everybody? So I'm going to be doing my weekly analysis for next week, which is the beginning the 8th of January, for all my pairs, Nasdaq, dollar and bonds. I'm not really doing ES because I just don't trade it, so there's just not much point for me. The only thing I use it for is SMT. Alright, so let's get into it. Here we have the Nasdaq weekly chart. What we've seen this week is we've seen a close below this weekly fair value gap / BISI after a trade into this area up here, which is the other weekly fair value gap / SIBI on that side of the chart. And then we've seen it working around for the most of this week inside of this other BISI fair value gap. But now this should act as inversion if we come back up to it. And I'm looking to see how we trade during the first couple of days of the week on Monday and Tuesday to see if we have a close below here on the daily chart. And then below here is a previous weekly low that has some significance because it's in the 40-day IPTA range. And then here's a weekly fair value gap / BISI that would be a target given that we come down into that area, as it would take the low if we go down to here. I mean, there's also the consequent encroachment of this wick, which is just around there, which I would also be looking at as an objective for next week. Alright, here now we're on the daily chart. What we saw last week is this little BISI here closed below, and that's what brought me to my bias for this week, where we're going to go lower, and that has panned out. We had 3 consecutive days of down close, and then on Friday we saw a TGIF set up into a retracement in the afternoon session, and yeah, it's a pretty generic weekly profile. So here we have this inversion fair value gap / BISI, which has been, all these bullish PD arrays have just been eaten through. BISI done, order block done, order block done, BISI taken, and then this one is closed below. So my first thought is that we're going to continue lower in next week. We have a previous day's low here that hasn't been taken yet, and then we have this weekly fair value gap / BISI, the low of it there as a target, and then this daily fair value gap / BISI, which is overlapping with those two, and also the consequent encroachment of this wick if we see more downside movement. We have this. I wanted to see that as an objective on the upside for Friday, but we never saw it as a. And then here we have this consolidation and then a leg up, entering the sell side of the curve here, along here for a market maker sell model. Below this low is my initial bias for next week, that we're going to go lower once again, and aim for this previous day's low, and also the equilibrium of this consolidation, if not down to this low. Alright, that's the daily, expecting lower prices. Here on the hourly chart, we've seen us work through from London on Monday. We had a very big drop, and then Tuesday's trading, we've just been going down every day, and then we saw a TGIF set up after the NFP release on Friday, and then a little retracement back down during the afternoon session. I actually don't have it marked up here, but if you see this BISI here, between those 2 hourly candles, there is actually this black candle closed below this BISI here, and then this candle here has not closed back outside of the range of it. So I'm expecting this to act as inversion to come down to the consequent encroachment of this wick, and then the weekly fair value gap / BISI. Alright, moving on, we're looking at the dollar. So here my weekly analysis again was correct. We came into this fair value gap / BISI, order blocking threshold, and this week we've come up into this weekly SIBI / fair value gap here, and then we've seen a reaction off of it. Then I'm watching the consequent encroachment of this week's, or last week's, wick as something to close above if we're gonna reach for these equal highs here and here, if we're gonna go higher on a longer term reversal basis. Then yeah, so this is a weekly order block here, small little candle. Let's move down to the daily chart. So on the daily chart here, we've seen almost every day up this week. We had Monday, Tuesday, we had big up close days, and then we've had the rest of the week working inside this fair value gap / BISI on the weekly, and then this daily volume imbalance here, and then here as well. This old inversion fair value gap / BISI has been used. Old daily inversion fair value gap / BISI has been used once again as support after we treated as support and then resistance. Now we're trading higher one more time. That is a weekly fair value gap / BSC. I didn't realise the screenshot didn't include the time frame it was on. Let's go through the next chart. On the hourly, we saw Tuesday trade up from where we were after I said we traded up. Then we had this weird like overnight wick during London. I think it was just something wrong with the TVC, which is the data provider for the dollar index that I look at. And yeah, it didn't appear on anything else, so I think this is just some sort of like glitch. But we worked through this daily fair value gap / BSC here on Friday. We kind of came up, down. As a primary uptrend, we came up, and then on Friday, an FP hit, we slapped higher, and then we came lower to take out these two lows here before a retracement up inside the range. Right, let's look at the bond market. This is the 30-year Treasury note. Here on the weekly, what we've seen is this fair value gap / BSC provide some frame of resistance. What's my cat doing? Some frame of resistance to go lower in this week after we've seen these two candles. Consequent encroachment of that. So we've seen this candle drop lower into this fair value gap / BSC on the weekly. Now for the bonds, I don't have a very strong bias on the weekly chart because it could be just a simple retracement. But that's one thing I'm going into next week with, and I want to look for how we're going to trade around that area, if we're going to treat it as resistance or we're going to trade below it and then see how we move from there. But on the daily chart here, this was the inversion fair value gap I marked out on last week. The inversion fair value gap, this was the inversion fair value gap that I marked out last week. On the analysis that I wanted to see it support price lower, just like we saw on the Nasdaq. And then we have closed below it on Tuesday and Wednesday, Thursday, Friday. We've seen a trade through the mean threshold of that order block and that one there, closed below that, establishing some sort of bearish order flow. That I would have liked to see a close below this fair value gap / BSC, although I've marked it as inversion because that's what I want to see it work as. And then through the weekly fair value gap / BSC, consequent encroachment has been respected. But again, I'm going to watch the consequent encroachment of this week here to see if we're going to trade lower through the week. Here on the hourly chart, we've got the T-bond futures, and this is just some kind of chop at the start of the week before we drop down lower on Thursday and Friday, coming into a Friday TGIF setup and then a retracement here. This 60-minute balanced price range is this fair value gap overlaying with this one. I wouldn't think that we come above this area now if we're to continue lower. Then we've got the consequent encroachment of this wick to measure volatility if we're going to go very fast lower. But I want to see how we react to these this rejection block here, and then these lows, see what happens. Yeah. Then, okay, so now what I'm going to have a look at is the commitment of trader reports, which came out on Friday, and we're just going to have a look at them for a couple different pairs because this is one of the main things driving my bearish bias right now. So here you see on the Nasdaq, last week's commitment of traders report had reported like, I think it was 30,000 or 26,000 or something short positions on the commercials, and then this week we've got almost 50,000, which is like a 2 to 3 yearly low of net positions. So that's one of the things mainly driving my bias at the moment on Nasdaq. So yeah, let's move on to the other pairs. Here we've got ES. It's not seeing the same kind of movement I'm seeing on Nasdaq, but you know, they're not perfectly correlated, and ES can tend to have a higher net short, net long, because you know everyone invests in the S&P 500 just because it has those yearly returns. And then the commitment trade is higher, staying about the same. Then for the Dow futures, one thing I am actually seeing here is an SMT between this low there and then on ES and Nasdaq, but we'll see how that performs during the next week. But on the Dow here, we've also got, I didn't look at the couple years charts, but here's a 6 month chart, and we're at a 6 month low of the commitment traders. So yeah, I'm looking for lower prices this week. And then here on the dollar index, over the past 3 weeks, since about here, we've started hedging in long positions. or the commercials have started hedging in long positions, and we haven't had this many net long positions since the rally up here during July and August. Then the last one looking at is the bond market. The bond market is pretty stable. It doesn't really have much movement either side, especially with the commitment of traders. Hasn't made much change. We're still above the 50% line, although within the last 12-month range we are below the 50% of the 12-month range. So thank you guys for watching. Please leave a like and subscribe, it would mean a lot. And please leave a comment down below if you enjoyed my video or if you have any questions about my analysis. And I'll be back with another video next week.